Bringing up banking, I know today Buffett brought up how if the laws didn't change, he said they might have major banking operations that maybe rival or exceed the insurance operations they have today. And I'm just curious, like Geoff, I know you talk about banking, I like to analyze banking, and I'm just curious if you have any comment on like the current banking environment, if that's changed anything in how you look or analyze banks. I know banks have been through rising rate environments, and they've been through this before, but I'm just curious your thoughts on that.
Yeah, I mean, higher rates are better for most banks, but the period where the rates are rising and the repricing, many do not reprice as quickly, so they would need things to level out or come down a bit before you'd see better results. And what Buffett's talking about, I mean, because you wrote a book that covers the bank, the Rockford Bank that they had, but that bank, the way it was operated, and also how they operated the savings and loan that they ended up owning, is very different from how most banks operated. The savings and loan, they basically got rid of a lot of their deposits on that one because they didn't want to be in certain assets, and they really turned into a holding company to do totally different things, right? And a lot of savings and loans did fail that did the conventional things. So both of the banks that they owned, they did very unconventional things on the asset side. And what Buffett always talks about is making these mistakes on the asset sides. And all the banks we've seen that have failed, they could have had the deposits come in and kept it in short-term money or something, but they either made long-term fixed mortgages or they bought long-term fixed securities. And so it was a dumb thing on the asset side, even though it was a dumb credit thing.